Let's have a look at this question here. Question 2 here. Okay. Pursuant to a merger agreement between Big Sdn Bhd and Small Sdn Bhd. I don't think I did this big and small before, so right? I don't think there's a big and small. Okay. Big and Small Sdn Bhd will acquire entire shareholding of small. This looks like another acquisition planning. Are you clear now? Next page, 25. Okay. So here we are looking at Big and Small shareholding on 15 July. Thereafter, 1 August, Small will transfer the assets, some of which were acquired on 5th June 2012, liabilities and activities of its trading business to Big to be merged with Big's trading business of 1 August 2012. Both companies trade in home appliance. Big closes its accounts on 31st July, where Small closes its accounts on 31st May. Extracts of information of Small financial statements as at 31st May are as follows. It's a very small question, isn't it? It's not really that big, correct? Yes, no? Doesn't look that huge. But now, let's look at this part. Explain, you've got unabsorbed losses. You got unabsorbed losses, you got unabsorbed capital allowance, trade receivable, inventory net receivable, section 108 balance. This is a very important thing that you've never seen before. Just mark that one first. This thing doesn't exist anymore. Okay, this is your tax, this is your dividend frank account. Okay, does that make sense? Okay, so explaining the following issues arising from impending takeover, bearing in mind the basis of inventory valuation on ongoing business and that of business going into cessation, the strategy that should be adopted by Small Sdn Bhd for inventory valuation at the time of transfer of company business. This is all about inventory valuation. For a while, the examiner tested inventory valuation. After she never tested for some time already. So she can ask you back inventory valuation issues again. Got it? Especially in terms of acquisition mergers. Okay? Then, dividend distribution policy that should be adopted by Small together with computation of components of dividend that may be distributed. This question, I think, may be not so critical for now. Okay? Because of the changes in the law. Okay? Make a note. Next one, the course of action that should be taken in terms of trade receivables. So I would stick the answer into these two parts. These two more important. Got it? Trade receivables. Why control sales provision will apply to the transfer, the entitlement of capital allowance, initial allowance, balancing allowance and balancing charge available to Big and Small Sdn Bhd respectively in relation to transferred asset for the year of assessment 2012 and 2013. Does that make sense? So now, you can focus your question. In other words, I would suspect all of this are okay. You can exclude this one. You don't need to answer this one. So I'm going to just say we'll delete that whole thing out, the distribution issue out. Does that make sense? I don't want to talk too much about the distribution issue because it's not so relevant anymore. Does that make sense? Clear? Not clear? Okay. So now that you know what you don't need to do, let's talk about the first one. Okay. How to value the inventory. Okay. What is the easiest one here? The 4 marks. Handle the 4 marks first. Explain the following. So it doesn't matter, you don't need to do it in sequence, you can do it any way you want. Are we clear? Got it? Okay, let's go one by one. We'll do this big and small. Okay, so under big and small, the first one we're going to do is the trade receivable treatment. Does that make sense? Now, what's the rule with trade receivable? You did study trade receivables before, right? The idea of what is trade receivables. Now, there's a big issue with trade receivables. That is what? It's about bad debts. Are you clear now? Got it? Trade receivables obtained Does that make sense? Clear? Not clear? Okay, now I can do part A. A is about what to do. So here, can you see that the company has an unabsorbed loss brought forward and unabsorbed capital allowance brought forward? Yes or not? If you close the business down, this will be lost. Are we clear? Can't use it anymore. So what must you do? You should probably load profit up to that level. Does that make sense? Load up profit up to that level so that you can get some cash into that system. Are you clear now? Follow? So what does that mean actually? Okay, here's what you're going to say. Inventory is currently held at RM, how much? 280,000. When will you close your business? You are going to close your business on 1 August 2012. Okay, so the 2013 basis period is going to be from the date you start your accounts, which is going to be from where? 1 June. See, both companies. Small closes his accounts on 31st May. So basis period for year of assessment 2013 is going to be 1 June 2012 until you close your business. Does that make sense? That's why the basis period is so short here. Follow, don't follow. I repeat again, the basis period is short, 1 month only, because you close your business.
Okay, that's talking about small here.
Yeah, small. Okay, does that make sense now? Get the idea? Okay. So inventory is currently held at 280,000 NRV. Small will transfer Does that make sense? Do you know what's going on here or not? Yes, no? Sure. To recoup, cover back the unabsorbed loss and the 50,000 capital allowance. It means make a profit. How to make a profit? You adjust your inventory value up. Put it at a higher sale value. That means as if you're selling your inventory at higher value. That sale value of the inventory can then translate into a profit.
Is it used in section 35?
Yeah, this is all under section 35. All this that you study about inventory is under section 35. But you don't need to remember the section 35, the section, you just need to know the principle. Are you clear or not clear? Follow? Any questions there? Because the value will be based on global sales value. Okay? Does that make sense? So you can allocate the value to inventory or PPE or whatever it is. Okay, no? Does that make sense now? Can, huh? Clear now? Okay. Now you got another question. It's called control transfer. Remember the control transfer question? All of this are overdue already, by the way. Overdue. Inventory hasn't been tested for some time. Got it? So do get ready for inventory. Some time already. The examiner very quiet on it. She used to test quite a lot. Now quiet. Now can come back. Because she already finished most of the things in the articles already. The article or maximum tested already. Clear? Most of the items in the article are done. Except for venture capitalists like VC. Okay, so the next one you look at part D. So part D is all about, you're talking about control, this I have to explain why. Big acquire all shares, acquires 100% share capital of small. So when you have a controlled sale transaction, you need to say when the last person can claim capital allowance, when the new person can claim capital allowance. Does that make sense? So first of all, you need to know when does the year of assessment, the final period. I told you control transfer dangerous questions, and the way to answer is like this. Does that make sense? You need to specify when this person can claim, when the last person's final year, when they can claim the last allowance also. Are you clear now? Okay, that covers that one. Are you clear on how to write the control sales answers right now? Skip out. You just need to know the dates. Let's figure out the dates, the last date, the first date. Okay, no? You need to go through the notes, class notes a few times to make sure you know the rule. Because it's quite easy, Mark. You just have one transaction only. It's not going to be a lot of transactions. It's just going to be like one date, 2 dates, and okay, no? She's not going to give you like 20 days like I gave you in the example, no. In the example I give you a lot of dates, you know. In the exam it's only like 1 date. The buying company, the selling company, finish. Okay, no? Are you okay there? Any questions there? Follow, don't follow? Can? Any questions there? Are you okay? There is one thing you may need to be very careful with when you are doing this question. The one thing that you may need to watch about is you got something inside your GST, remember? Which angle of GST might come up? Do you know or don't know?
TOGC.
Yes. TOGC provisions of GST might come. Just make a note there. So you might get a TOGC provisions. The rule is basically the buyer takes over everything. Okay? Buyer takes over everything. Does it make sense or not? It's just a direct transfer of the business, and the sale, remember, it's actually a sale of business is also GST. Yeah? There is a GST for sale of business, correct? But what happens is the buyer is deemed to pay the input tax and also claim the output tax. Does that make sense? The output tax is supposed to be paid by who? Seller should pay the output tax. The buyer will incur the input tax. And then later can claim the input tax. Are you clear now? So what happened here is, under the TOGC rule is that the seller doesn't pay the output tax. It is deemed to be paid by the buyer. So it's like a knockoff. So there is just like a direct transfer. This is like a special rule. Are you clear now? This is not zero rated. This is the sale of business will fall under 6%. Are you clear now? Clear? It's not going to be zero rated for sure. Yeah, because zero rated is specified items. Clear? Exempt item also is specified items. Are you clear now? This is a sale of business. That means you are supplying some goods and services across to the other party. So you are supposed, if you are registered, the other party is registered, then they have to charge GST. Does that make sense? Clear, not clear. Of course, the assumption is the other party continues the business. That's why it's transfer on going concern basis. Got it? Clear, not clear. Okay. So the examiner may want to put that inside here. Fair enough?